Hey guys, what is going on today? So we are basically looking at a pretty good week ahead of us. We have a lot of pairs shaping up, which is really nice. And yeah, so starting off with the DXY, there was kind of a trade in here, just something that I was a bit too busy, missed. Could say it's a missed trade, to be honest. I mean, I would have more so looked at this as the area. Been nice that we took out this, and then could have looked for the entry within there. It's okay, more than happy with that. I mean, looking at it on the related pairs, it was a bit difficult to catch the trade in there, so I was happy to leave that one out. But you can see it on the DXY very clearly, which is really nice, that you had your impulse correction over here, and now we're getting the continuation, which is nice. Overall, I think this, if you look at it from the higher time frame, it structurally makes a lot of sense. So we had this corrective squeeze, which I've highlighted over here, which I can now remove. We then started to move away to the downside, and then we had the similar sort of price action with that corrective squeeze again. Wasn't the most sustainable. We did have the near miss up here. This area is now evolved into this area. So we are looking at this as the overall range. However, when we look at it on the weekly, there is just massive movement to be made within here. So we are kind of in the middle of this overall range, hence the reason we're looking at this in more of a neutral outlook. However, there's those intraday trades that we want to take advantage of, and this could be the sell that could, you know, be all the way down here. So these are the sort of trades you really want to be capitalizing on, because a trade that you might see as a potential 4.4 could drop off and, you know, become 30% over the course, with a lot of scaling opportunity, and then 40. Obviously that was just one of many trades that could shape up, but it's just something to bear in mind. So for the DXY, this was basically what I was looking at, and this was my outlook. I put the Notion document in the description as well, so if you want to check that out, it kind of just outlines everything that I forecasted on the weekend. JP225, in my opinion, is looking stunning. One thing I do like about it, and I'll just quickly go to the weekly, is we've basically completed this, where we said that we would have this impulse to here, and then if you take that and you put it pretty much from the break, you know, that's being filled, and then you look at it over here, there still is some room for it to go further. That's one thing we have to understand for this potential leg. But then if we look at it, if we look at it from this leg here, this has basically fulfilled its move from here, and then from the break, that one essentially lines up with the other one we saw. So I wouldn't be surprised if we do extend further. However, what I am looking at on here, and I'll just go back to the 4 hour, is within this we kind of have this sort of correction impulse, and do we just kind of move back and then we start channeling. So there is a lot of risks to this, but if we can get a clear sort of internal structure, we might be able to play this as the accumulation area, where this just sells off, profit taking happens and whatnot. We move into this area here. This is where we could ideally be more aggressive with our position, and then if we do happen to drop off, then great, we can be more aggressive and come out the market around about here with 9%. But more than likely, as it approaches this area here, probably going to be more aggressive with about 3 to 4%. And then if we tap into here around about 5.8, I'll be super aggressive and just lock in 5. And then, like I said, if it commits, it commits. If not, it is what it is. But that's basically how I'm going to be looking to play it, and I'll be more than happy with that. Going into the top 6, so obviously you can see I've got some on watch, which I'll go to for in the end. I didn't quite get the entry I was looking for here. It just kind of extended and moved further. The DXY was the clear clue here, just because we had it clean on the DXY. The related pairs just didn't really give me the entry I was looking for. What I was looking for was the push up, which we had, and then the continuation for this to then move. It just happened to stall and correctively squeeze and then pushed higher. Sometimes these things happen. Could I argue there was a trade in there? Yes, you could, but it's just much higher risk, and it was basically this, and this wasn't what I was really looking for, so I was happy to not really take this trade. But there was that, and that was probably the cleanest entry that I could have seen personally. But like I said, it's just not the trade you want to take. You know, it's so easy that you get something like this, and that's just a part of this, and then you take the entry and it drops off, and then it comes down, does that, and then moves, and then you're not surprised when you see something like this, right? So for that reason, I was happy to stay out and just let it be what it is. There was then this where we kind of had this section here, but once again, not the type of entry that sustainably would help me kind of grow, and I just didn't want to take that. So right now, still looking for continuation. Only negative is that right now we're trading at that level here. So what we do want to really see now is we want to see confirmation. We want to see confirmation that we've either broken above, created continuation, and we're moving, or we have clear-cut continuation to move higher. But this is an area where it's a bit more for gray zone for me right now, because we could even still intraday reject and come back down to this low and fill the gap before we even get there, but highly probable that we're just going to smash through it and go. That's why the positioning over here was much better, because there was a lot of room to get to this point with protection. So we just have to wait and see how GU performs. The nice thing about it is we also have a USD CAD on watch. Sorry, not USD CAD, Euro USD, which I'll go to. I might as well go for it now. So Euro USD and New Zealand USD. Sorry, been in the gym and it was a heavy session, so I am feeling a little bit tired and exhausted after that. But what we're seeing over here is we have this corrective sort of push here. So we pushed out, and then we had this corrective squeeze to the side, which is accumulating volume to move to the upside. What we can see over here is that we have this corrective sort of squeeze, and I'm looking to see if we can come back in to get the push higher. That's the only entry that I'm really looking at right now and willing to entertain. I don't want to kind of just take a tight flag here and then kind of be tagged in and out. I want to wait for something that kind of has a bit more weight to it, and because this is all overall corrective, there's a lot of risks involved with trading within this right now. We can't determine that this is definitely the run, but you know, it's just not looking too pretty, but we can make sense of it and actually probably make some decent capital from it. So keeping it very, very simple right now. I just want to see that come back in or push higher, break above here, continuation, whatever. Clear continuation in this area would still be nice. So if we pushed up into this area and created something like that, and then we went, that would be phenomenal. But the thing is, we have so much news in this little area here. It's just a bit tricky, I'll be honest with you. This is a very tricky area to trade in, because if you look at it, well, I'm pretty sure we have NFP as well. So we have ISM, where that could create some volatility for sure. Then we have Fed Chair Powell's testimony, ECB, and then again another testimony, and then NFP at the end of the week. So it's just going to be a very volatile week, but using the news in our favor, we'll see how we can take it. It looks like as we're approaching this area, we are coming into some news. But yeah, I don't think there's much there. I think if we can get that corrective push back into this area, it's just one of those ones, like we kind of have that near miss here as well. So if the news came, I wouldn't trade it. I would just stay out the market personally, because the market direction is not clear. There's gaps in this area here. There's more than enough for this to continue. It's very choppy and messy. The nature of this isn't exactly clear as well. You know, we're seeing flags which are not really completed, and there is structure, but it's not the cleanest. And like I said, sometimes in those market scenarios, you can just wait, pay attention to something else. So New Zealand US dollar would be my hedge play, to be honest. Not hedging it for the same trade at the same time, but it'll be more so I'm looking for the short opposed to looking at the long, like we saw with Euro USD and GBP USD. Nice thing about it is we had that solid push away, and we're seeing this across New Zealand pairs alone. So I am trading this as its own separate entity with the other New Zealand pairs, anticipating volume to be built throughout the New Zealand pairs. So there is better New Zealand pairs there as well, like New Zealand yen and so forth, but we'll talk about that after. We're correctively squeezing into this area here where I'm interested. There's multiple near misses to it as well, over here and here. Correctively pushing away. There's a lot of liquidity being built here, so either we get a solid momentum and we just continue pushing out higher, cool, it is what it is, and we look for continuation. Otherwise we push back in, continuation, risk entry. To the bottom of the flag we still have more than enough to protection, more than 3%, which is beautiful, and then to the downside we can just trade accordingly. Most probably would be trading around about into that 7% region. Could even argue that we'd look for a manual break even, but truthfully I think this still has massive potential. But yeah, I would be out the market for 6% really and truly, just because I think I would be so aggressive at that point that when it comes back to this low, it'll probably just push back up. So yeah, we'll have to wait and see, man. If we get the momentum, we get into the trade and it just drops and it just rapidly moves, then fair enough. Like, we're in for a solid trade and it's just moving, and we can trade and manage accordingly. USD CAD is pretty nice. I mean, one thing I do like about this is we have this area of liquidity. We sold off sharply, we pulled back, now we correctively came back, but we've created equal spacing, arcing nature, and a 1, 2, 3 into it. As we zoom into the 1 hour, what we can see over here is that there's no clear middle section. This is all corrective price action, a squeeze. So what I do want to see is that just a clear push higher, break above the ray line, which happens to line up with liquidity. That 1, 2, 3 lines up with it, and then we push up and push back in, create continuation, and we go. More than happy to wait for that continuation, because if we are in the sequence to the downside, there'll be an abundance of trades on the way down. Knowing USD CAD, we'll probably get some nice volume come in. So this flag may be further down, it is what it is, but overall we're looking at some pretty good price action across the board, similar to what you just saw in New Zealand US dollar. So this is New Zealand CAD, and you'll see similar on New Zealand yen. This is the reason why I think the New Zealand pairs would gear up, because they're all pretty much in this sort of zone. The one thing that I am seeing as a commonality across them is that they all do have this weaker higher time frame. Like, even though we had a solid rejection, it kind of just has that sense where there's always the variable that it could pull higher. So I wouldn't be surprised if it did pull higher, to be honest. I wouldn't be surprised at all. I think what I would mostly be interested in right now is just refinedness, corrective squeeze. There's more than enough for this to sell. I think the fact that we sold off and then we just correctively created this, we could just sell away. It's completely fine at that point. We just have to understand that we're not looking for perfection, but we could still come up for the third touch, get the risk entry in there, and great, we're in for a phenomenal trade. And that's what I'm really looking for, because we can see that the New Zealand pairs are not really just yet ready, and this is a corrective, very corrective squeeze. We have a bullish wick as well. If you see it on the 4, it's a lot better. You can see that's just a massive bullish wick. I would like to see that wick get filled, reject, and then we're in for the trade. EuroCAD likewise looking very nice. We can see that we had a solid push away. We had a near miss out here, but that's kind of irrelevant now because we're all the way down here. We had that scoop near miss again, which is also very nice, but now we're getting a mini double top over here, but I'm not interested in that. I'm looking at a solid push above, break out of that ray line, push back in, continuation in short. So you can see the similarity across all the trades that I'm showing you. Additional pair, GBP New Zealand, we can see ray line. We're looking for push down, continuation, which we didn't get. We actually came back up, and now we're retesting this area. Now there's two questions to it. Is this the area where we would be looking for an M star? Not really. Is this an area where we've come from a solid push and we could get a larger continuation to the upside? Possibly. And is this the type of pair that could be corrective and just keep remaining corrective? Absolutely. So does this technically become the highest of quality pairs I haven't watched? Not really, because the trade was looking good until we did this. So now I just have to wait. What I would love to see though is if this just rapidly moves up here, pushes back down, gives us this by Friday, and we're in for a trade. Phenomenal. But that's a lot to ask for, to be honest. And I don't know. You know, I really don't know what to really assume, and I'm not going to forecast it so deeply right now because I'm not too bothered about what does happen. I just want to wait and see what data the market can give me so I can take advantage of it. Most importantly, I'll be looking for that where we come back in, we get a third touch, push back up, insurance entry, we're up for the buy, and then we go in this way. So at least the positive out of all of this is that what I'm looking for is a lot more clear now, because before it was kind of a bit skeptical. Am I looking for the short? Am I looking for the long? I was a bit iffy, but right now I can see exactly what I am looking for, and I'm looking for an expanding. So this is nice because what we'll have is we'll have this break above and then come back in and then go up, and then in a result we'll have this where you get priced like that, like this, and then we're expanding straight in there. So then that gives us the momentum that we're going to need for us to go to the upside. So that's looking very nice. So I'll just wait and see how that formulates. I just need to give it some time to materialize, but overall, stunning pair. Back to back, I think I'm looking for something very, very similar now with Euro New Zealand. What was looking nice was that we had this sort of area of interest here, and we rejected, and then we started correctively moving. I thought there was enough volume to be built for a solid push down and then a continuation, and that was exactly what I really wanted to see. But considering that we're now seeing GN gearing up for the long and sister pair EN is just hanging about, I would be looking for something very similar now on both pairs. Originally I was looking for the short, but understanding that the long is more probable because of the momentum and the push we got from that low. It's just one of those ones where we're in this very iffy situation where, is this just becoming a very difficult trade? And the answer is yes, but if we can get a clear continuation within this, it will be great. So once again, this one may be a bit more flatter, but if we can get something like that, great. I'll be happy with this trade. I will keep this forecast on the side though, just in case we do sell off, but more than likely I will be looking for, you know, just something so simple like that, and then we'll take an entry. So I'm going to be waiting extra patient for this one. No need for further forecasting. It'll be more so of a two touch at this point, in my opinion, because I would class this as the first touch. The original like part of the impulse, I wouldn't even use that as a first touch. I say that's too subjective. I'd say that's your first touch. If you can come back in, use that as your base. If we break or even tap into it and push away, create an insurance entry and we go, that would basically be the go-to. If we do continue to just sell off, then the continuation would have to be somewhere way below that ray line to remove any subjectivity to the trade, and then take that continuation. And yeah, we'll go short, and this is what the continuation I'd be looking for would look like. I mean, you got your clear first touch, which would be a bit like that, and then you'd have your second touch, and then you'd like create a middle section, come back up, you get a three touch, and you'd short, and you'd be so determined at that point with those three touches that you're happy with that trade. You'd be way below that ray line, you'd be trading with all of this. There's no real inflection areas on the way down. Immediately you have more than enough to manage. Trade is stunning at that point. So this is still a very good trade if we get it. Like I said, it's just one of those ones where it just wasn't ready. There wasn't enough liquidity, and that's what the market is seeking right now because of this corrective behavior here. That isn't your typical middle section as well. That's why I think the buy is more probable. If we correctively just come squeeze back into this area, that's another situation. So we'll be waiting to see what happens there. Okay, so Aussie Yen is my next preferred entry, which is kind of looking more like a two touch the more we move across. To be honest, I can't really put my finger on it because it's not so clear at this point. It's just one of those ones where it's just squeezing correctively now, and I would have wanted a clear three touch, but I just have to wait and see how this formulates. And yeah, I mean, what I do like about it, I'll go on to the four, is we had this value area, we came in it with an ascending channel, we squeezed into the ascending channel, we sold off, we started creating a continuation, but it's just like it's not kind of committing to the structure at this point. So it's one what's really testing your patience. Just want to see this correctively come back in, create a floor, create a nice little arc, push back in. You got a little scoop here, a little scoop there, come in for the third touch, push down, insurance entry, and we sell. Reason for the insurance entry is just to remove the subjectivity, because if you take the risk entry here, it could just zoom back up to the upside, and then you've got a bigger M star before we sell. So those are the sort of variables you want to look at. Remember, this doesn't have to complete on this can still move up here, but then I wouldn't be looking for that long position. So that's just something to be very clear on. New Zealand yen, so in line with our New Zealand CAD, our New Zealand US dollar. I am looking for that continuation to the downside. This is very similar to Aussie yen as well. Obviously, you know, they work hand in hand a lot of the time as well. So it's got that squeezing nature to it. I do want to see that 3 touch, which I kind of spoke about. If we get it, great, phenomenal. If we don't, it is what it is. Obviously, I need to see that middle section. I want to see that touch. I want to see it go from there. So this will be more clear cut. You know, the nice thing is we have that little point there. So do we kind of just correctively squeeze, tap into it, get the risk entry up here? I'll be happy with that risk entry. Kind of works as a little mini head and shoulder sort of situation here as well. And then yeah, I think overall I kind of like this because the validity on that is, it's not too bad, to be fair. Yeah, I mean that meets the head and shoulders thesis. I mean, it validates it enough for me. I just see the only negative is when you go to the weekly and you see that we've just traded so close. That could be the mass psychology. We've traded so close to that higher value area there, but then on the weekly we've had a stunning rejection there. Now we're just accumulating the right shoulder. If the market can make its mind up and make a decision here, then we could get in for a decent short-term position, which could materialize and get pretty large. You know, we could get an easy move from here with continuations all the way down here before we even come back up here. Not saying that that's most probable, but it's possible. So we'll be looking at that. And then we have Euro Aussie as well. Euro Aussie is looking a bit messy, but at the same time there's some potential in here. We can see that obviously we are in a sideways range. Within the range, we can see here on the daily that price is corrective, but moving to the upside. It's just, in terms of a pattern separation situation, not my most favored position, because I was looking to see if we get the sell from here, we push down. We're aware of this area here as your first area of interest. If we can push through and we get down here, but what I'm seeing right now is that we're just not committing. And I think because of the lack of commitment, it's my least favored position amongst all on watch right now, hence the reason it's at the bottom of my additionals. But you know, these are the ones that could just really just mess about, and then next thing you know, this is the position here which I kind of was looking at but not interested in, and then it just sells from here, you know, and then boom, price just comes down here and there was no entry. So like I said, I'm not gonna force the market. I'm not gonna look for anything that's, you know, I could make things up. That's the crazy thing about this pair right now, is it's just too corrective that you can just start forcing things and be like, yeah, that's the trade, and then, you know, you take it. And even if that did play, it's not really a trade that you can take over and over again. So this is just massive corrective price action in my opinion, and you just want to stay out of that. It's just forcing the market for something that just doesn't feel right, and usually when it doesn't feel right, it usually isn't. So I want to make that clear. Okay, so USD ZAR is one of my soft watch pairs. Now I was looking for a large continuation here to play into there. Now that we've actually committed to it, I'm less interested in that continuation and looking for the long, which is a very interesting one, because you do your Sunday market breakdown, you look for the short, and then suddenly you're at the value area, and now you're looking for the long before you even got the short. So these things happen, we accept them, and we just have to shift our bias in the market, which sometimes is very difficult when we're really looking for shorts, and then suddenly the data changes and we're suddenly looking for longs. So you have to ask yourself, at what point now are we looking for longs? And I'm just going to invert the chart quickly. You can see here that not the best of structures, and I'm not always favorable for these, but what we could see is if we come back up here, we push back down, and you know, we had that momentum and we create the continuation, we could be in for the I'm going to flip that again. We can just see that we had the push up, continuation, and we're up for the upside. That'd be exactly what I'm looking for. You know, then that would make sense, because then you can see that this was the correction, push up. There was a correction in there where we were looking for the rejection. It failed, came back up, created the bull flag, and then within there we had the insurance entry, which was similar to this one, but then this one happened to be the one to go. And then next thing you know, we're up here. You take the trade on the risk entry, and yeah, easily you could do that 20 something pips. And then yeah, all the way up here you're trading 22%. Obviously you probably wouldn't be holding the full 22, you'd be out of the market, maybe even around about here with 14, 15, maybe even 12. But if you did manage to get there, probably 20%, I would understand that 20% for me. But there's massive potential on this one, because if it does continue to keep going, then you can see that you have your next value area, which then sets up here. And then if it smashes through, that 20% trade then turns into 33 or whatever. But we're way far from there right now to even care about that, and there'll be a bunch of scaling opportunities on the way. So keeping it very, very simple for now. We're going to corrective squeeze coming into that third touch. Do we get the rejection, push up, continuation for tomorrow, maybe the next day? We'll have to wait and see. But this is overall going to be what I am looking for, and I think this looks stunning. So we'll have to wait and see on that one. Euro USD, so like I said before, I'm going to wait for that to come back into this area. If we get it, we get it. If we don't, it is what it is. Cover New Zealand US dollar, so the hedge play, the short. Aussie New Zealand, very similar to many pairs you've seen. Again, we're looking for this value area to be tapped into. Once it's tapped into, because this is just very messy and corrective, I want to remove as much subjectivity away as possible. So what I am going to be doing is this, and essentially just looking at it like that, and then just want to really observe that, where we've kind of just broken above. I don't care about these 3 touches so much and things like that. I'm more interested just to see solid commitment, push down on the 4 hour. So the 4 hour would just be solid, like we broke above, we pushed back in. Even if we could get it a little bit further down the flag, that's great. I want to get that 4 hour commitment in. Heavy bodied full candle would be phenomenal, and then continuation on the 1 hour would be perfect. But I'll understand if we get 15-minute flag here and then 1 hour later on down there. If I miss the 15, it is what it is. The 1 hour will come eventually, and I'll take that one. So that's how I'm looking at there. Aussie 200. Now this is one of my most favorited ones, I'll be honest with you. Now the reason being is I've been following it for weeks, and I've capitalized a fair amount on it. Now I'm just going to shape that up a little bit more. Yep. So what we can see here is that we do have a 3 touch. We're actually on the bigger time frame. We can see that we are within this larger expanding, which is tapped into the highest value area, and then we broke it with an ascending channel, which is now technically where all the attention is going. Do we get an early sell-off? Possibly. It's very possible we don't have to complete, because remember, at the end of the day, we are already tapped into the most valuable area. So the real point of interest here is that, do we just sell off, get the continuation, and we go? Great. If we do, phenomenal. If we do come back up and then we do tap into the third touch region, okay, it is what it is. But more than likely, I'm happy with the short. I'm looking for the shorts pretty much prime right now. If we get it, we get it. I don't want to take anything which is above this area. It's too subjective for me. I want to just see it kind of get below there. So that's basically my outlook. I think oil might go tonight, but I'll be sleeping for sure. We have to wait and see what's going to happen here. So we have the value area. In fact, I think this one has been the more interesting one that's been tapped into, and we tapped into that. We had an entry, but I decided not to take it twice. So we had this one, which essentially came off the bat off here, and then there was the entry in there, and then when we came back and scooped, I was going to re-enter around about here, stop loss above there, but I just kind of decided I'm going to wait for what I really forecasted, and it was this. So if we get this is what I'm going to be going for. If we don't, let's see what happens. But there was definitely that. But like I said, right now, because when you didn't mention this, so I actually passed another prop firm challenge, but this was an in-house one, which kind of means a lot more to me. So I do have like a certificate for it and stuff as well. Let me see if I can quickly show you. Looks a bit like this. Oh no, it's invisible. There you go, certificate right there. Obviously I have the copy on the wall on the frame and stuff, but yeah, so overall that was kind of the main important thing for me. But back to the point, we'll look for that continuation 3 touch, and then this one is stunning, silver. In fact, silver's good because we have the 3 touch completion. We're impulsively breaking above, catching people out on the wrong side. Now we just need to see impulse back in, continuation, and we're short. Simple. Play that run to downside, not looking for longs, looking for shorts. And yeah, that's it. So have a great week, guys, and I'll catch you guys in the next video. If you guys have any questions or anything you'd like to ask me, feel free. and yeah, I'll be more than happy to respond and then get back on that. So yeah, so now I'll be trading. I've got 60k, I've got 40k, and then I'll be having another 90k soon as well. So kind of accumulating over $250,000 there. And then the main goal is obviously to smash it for this year.